In this session, let's learn how to create intercompany journal entries in GL. Intercompany transaction is an activity between two legal entities. For example, we have three legal entities in 2M Global General Ledger. Any transaction between the three companies is considered intercompany transaction. The three companies we have are M1 Global, M2 Global, M3 Global, and these are attached to a segment value of 1000. M1 is attached to 1000, M2 2000, M3 3000. That is the balance segment value. Now when we create a journal entry between these legal entities, Oracle General Ledger also creates intercompany entries automatically. So let's see how this works. We are in 2M Global General Ledger. I'm going to go to Journal, enter Journal, and choose a new journal. I'm going to give a name for this journal, Intercompany Journal. I'm going to leave all other parameters as is and then go to 1, and then here I choose the company 1000, cost center 000, account say rent expense, and say 1000. I want to create an intercompany transaction between company 1000 and 2000 here, and I'm going to create a liability in company 2000 for this value. I have for the debit with the balance segment of 1000, company 1000, and for the credit I have a balancing segment value of company 2000. So I'm going to save this, and once I post this transaction, the system would create an intercompany line for company 1000 and 2000, so that will act as a balancing entries for these two companies. So let me post this journal entry. Let's check the status of the posting. So it's completed. All batches have been completed with no errors. So let's close this. Let's close this. So I'm going to requery this. So when I queried the entry, I got two more lines here. So basically it is crediting company 1000 for corresponding debit that was created by us, and similarly it is debiting company 2000 for the corresponding credit we created. And it also puts in a description called intercompany balancing lines added by posting. Now let's look at a situation where there are multiple companies, there are more than one company involved. Going back to journal, a new journal, multiple intercompany. I'm going to leave the rest as is and then go to the account, and here say I'll take 1000 as the company, and I'll take the same rent expense, and I'll create an entry for $2000. On the credit side, I'm going to use the company 2000, and I will use liability, outstanding liability 2000. this is done. And I'll put $1,000, and I'm going to use company 3000 also here for the same account for $1,000. Now I'm saving this. So once I save this, for the system to create the intercompany journal entries, I need to post it. So let me post this transaction. So it created a concurrent request. So let's wait for this to complete. It's completed. So let's clear this again. So here the system created 4 more lines for intercompany activity. Now if you look at this, for each of the entry for company 2000 and 3000, there's a separate credit created for $1,000 each in company 1000. If you look at it, there are 4 intercompany balancing lines that's created with the system, 2 for company 1000 and 1 each for 2000 and 3000. This is primarily how we create intercompany, how the system creates intercompany lines for journal entries between 2 different legal entities.